Imagine stepping into a taproom where the first aroma that hits you is a sun-ripened mango sour swirling beside a bourbon barrel stout that smells like dark chocolate thunder. And then picture those same pours traveling in sleek cans from Tallahassee to Charlotte to Nashville, fueling a Southeast craft beverage boom now topping $7 billion in annual sales. Welcome to Ology Brewing and Distilling, the science-driven flavor lab that has already racked up 40-plus medals, 6 taproom and cocktail bar footprints, and a cult following of flavor chasers who screenshot our weekly drop calendar like sneakerheads camping for Jordans. By the time you drain this video, you'll know exactly why our sensory-obsessed R&D team can coax passion fruit pop from local hops, how our small batch spirits pipeline helped us double revenue through pandemic headwinds, and how you can grab an equity pour before our distribution footprint triples. So crack a cold one, because we're sprinting through 3 high-gravity rounds with zero foam, a dash of brewer dad jokes, and more actionable metrics than a Cicerone crash course. Ready? Great, let's slam the hook on the bar. 5 years ago, the Southeast craft landscape was ruled by macro-owned crafty labels, but our founding trio, 2 flavor chemists and a sensory psychologist, asked a blunt question. What if we fused lab-grade experimentation with laid-back Florida vibe? Could that mashup spawn a portfolio that flies off shelves while redefining taproom culture? Flash forward to end of year 2023, Ology sold 900,000 pints, canned 815,000 units, and shipped to 9 states. But more important, we triggered a $2.3 million run rate supported by 0 big box placements, meaning organic fandom, not discount deals, drove the curve. Credibility drop. I'm your host, Ben Beaker Barrel Fleming, 10-year craft brew veteran, ex-flavor and fragrance research lead co-author of the 80-page Ology Sensory Bible, and yes, the guy who once missed a hydrometer reading because I was busy adding freeze-dried strawberries at 3 a.m. Promise of payoff. Stick around and you'll snag our 4-step tap-to-shelf velocity formula. The secret to crossbreeding hops with lactocultures for Florida humidity crushability, and the investor cheat sheet that shows how every $1,000 today could parlay into priority keg royalties tomorrow. Segmented walkthrough. Incoming, starting with ignition, then throttle, then multiplier. First, ignition, because in craft beverage premium recipes are table stakes, but story-locked positioning is rocket fuel. Rewind to day 1, we released Sensory Overload, a 5.5% tart ale bursting with orange peel and vanilla. Packaged in silver can art featuring a retro oscillograph waveform. Every consumer scanning that label saw a QR code that launched a 90-second behind-the-brew clip of our co-founder Nick pipetting yeast starters while quoting Darwin because authenticity trounces gimmick. We also printed the brew's titratable acidity right on the label, something normally buried in lab notebooks, which turned beer nerds into instant brand evangelists. Fast forward, this radical transparency strategy pushed dwell time on store shelves from average 4 seconds to 12 seconds in our early A/B tests, triggering a 23% lift in point-of-sale pulls at independent bottle shops. But ignition needed physical community, so we anchored the brand in Tallahassee's Midtown District, an underserviced corridor with heavy student flow and weekend day trip traffic. Our taproom occupancy shot past fire code, pun intended, within 6 weeks, prompting an outdoor expansion and the invention of our tube-up drive-thru growler line, where locals could buy sealed 32-ounce cans without leaving the driver's seat. Tube-up kept sales alive during COVID lockdowns and later became a permanent channel representing 12% of annual revenue. We layered on sensory theater nights, pint flights paired with ISO notes of freshly crushed basil, cacao nibs, or cedarwood chips, turning casual drinkers into nuance seekers. Those nuance seekers join our flavor chaser list. 22,000 strong email subs, open rate 41%, click to purchase rate 13%. Next, throttle, because once the product market spark lit, we needed distribution torque. Ology's growth throttle rests on 3 levers: collab amplification, spirits diversification, and drop week cadence. Collab amplification means we partner with scene-leading breweries, Great Notion, Other Half, Burial, and invite them to Tallahassee for small batch collabs, then split can allotments so both taprooms drop the beer the same Friday at noon. The algorithmic ripple. Instagram geotagging triple crosses audiences, boosting follow counts by 7% on average per collab. Second lever, spirits diversification, because we realized the same sensory science could elevate vodka, gin, and especially our flagship Apple Brandy Barrel Finished Whiskey. We opened a boutique distillery arm next to the brewery, coaxed state lawmakers for a craft fulfillment license, and funnel spent grain into distillate, achieving ingredient circularity while flipping beer margin, 38%, into spirits margin, 54%. Spirits now drive 35% of net profit on just 18% of volume. Third lever, drop week cadence. Inspired by streetwear, we pre-announce each Friday drop Tuesday at 9 a.m. Tease flavor notes midday Wednesday via reel. Start online sales Thursday at 7 p.m. and ship Friday 10 a.m. This cadence trains customers to anticipate scarcity, so beer sells out in 12 hours and the drop email waitlist averages 1,000 signups. Live metric reveal. Our peach piñata smoothie sour drop moved 900 cases in 36 hours, netting $121,000 before we killed the listing online to preserve rarity, which in turn elevated resale chatter on Untapped and trade forums, free marketing. But growth isn't just digital. We run the Southeast Circuit pop-up tour, a retro school bus retrofitted with 8 taps, pumping brand anthem playlists in Raleigh, Athens, Gainesville, and Birmingham. Each stop uses a QR wristband system. Scan to pour, auto-creates CRM. Profile, tags flavor preference. Data show bus pours convert to online purchases at 4.3%. And to taproom visit intents at 9, segment 3 multiplier, because brand plus growth equals nothing without investor returns. Pillar 1 influevestors, equity backers who also post content, like the Baton Rouge bartender whose side-by-side sensory will TikTok hit 600,000 views. Referral tracking links show every influevestor post nets average 7 new can orders and 1 distillery tour RSVP. Pillar 2 investomers, repeat buyers converting to shareholders. Email subject, own your obsession. Invite subscribers with 3 purchase instances to invest from $100. 5.9% opt-in boosted current WeFunder raised by $268,000 and counting. Pillar 3, velocity governance. We publish live drop sales on our investor dashboard. A ticker flicks dollars per minute in real time. Transparency disarms skepticism and fuels FOMO because investors physically watch the brand mint revenue. Fraud? Not here. Each keg, barrel, and bottle is track and trace tagged. COA lab results are public, and our distributor remittances plug into a read-only QuickBooks API visible to shareholders. Action checklist for founders watching. 1. Infuse your label with mission data consumers can touch. 2. Anchor a physical community hub before scaling distribution. 3. Adopt streetwear drop cadence to teach scarcity. 4. Diversify into adjacent high-margin SKUs early. 5. Weaponize influevestors through trackable links. 6. Convert investomers with low-friction tiers. 7. Broadcast real-time sales to investors. For investors, scrutinize first-week velocity after each drop, evaluate margin mix between beer and spirits, and value brands that publish sensory data because transparency foretells quality. For policymakers, craft beverage regional jobs matter. Our 6 sites employ 84 people, source local fruit farms, and spin ancillary revenue for food trucks. So please expand self-distribution caps. Now future forecast Southeastern. Craft volume grows CAGR 8.1%, but fruit-forward sour and high-concept lager segments grow 12. Ology aims to capture 1% of that 12% wave, equal to 6 million incremental pints, translating into $23 million revenue by 2027. Distillery arm to scale parallelly through ready-to-drink cocktails, targeting state rollouts starting Georgia, the Carolinas, Tennessee. Expansion budget includes 4-barrel pot still upgrade, 60-barrel brewhouse install, and an Orlando taproom inside a renovated 1920s train depot, already LOI signed. Investor IRR projection at conservative 8% keg growth sits 22% annualized. But if RTD segment pops as category analysts predict, upside extends to 30+. Motivational send-off. Remember, the only thing smoother than our barrel-aged double chocolate stout is owning a piece of the brand that brews it. So whether you're a hop-hunting local, a craft, spirits collector, or an investor chasing flavorful upside, pour your steak before the next limited release sells out. Explicit CTA. Click the WeFunder link below, pick your tier, and let's toast to science, flavor, and scalable community. Cheers. This round's on you, shareholder.